You know, the tariffs could go up as time goes by, and they think
so that's not clarity.
No, I think that they say that.
If you have any money in the markets right now, you're gonna want to hear this. For the first time in a long time, we're seeing the market crash. Hey guys, what's up? It's BlackConsensus, and what is going on with the markets right now? I just got back from a safari park and I'm seeing so many types of uncertainty. The S&P 500 has turned negative for the first time. We are finally seeing a bear market in the cryptocurrency space. We're seeing Bitcoin form a bear market structure. Donald Trump has officially declared a full-blown tariff war with the rest of the world.
US President Donald Trump has announced sweeping tariffs on goods imported into the United States from all countries, including the UK. British-made products will face tariffs of 10% from this Saturday. 10% is the baseline tariff applying to all countries in the world. There will, though, be higher, more punitive tariffs on about 60 other countries, which Mr. Trump sees as the worst offenders when it comes to trade imbalances with the United States.
And all of this is going to affect our pocket, our economy. If you're not careful, you're going to lose money. And this is why we have to talk about this, because it's going to affect our future. We need to find out why people like Warren Buffett has sold all of his S&P 500 shares. And we need to find out why most people are not ready for this market crash. I can already hear the comments. It's going to be cheaper. Prices are going to be lower. Things are on discount. The thing is, when life-changing money disappears in a matter of months, it's going to burn, it's going to hurt, it's going to cause resentment towards the markets. So leave a like to this video and subscribe, because we are trying to get this video out to more people to warn out more investors about what's potentially going to happen. Take a look at this video.
My fellow Americans, this is Liberation Day. Waiting for a long time. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again.
So let's break this down. So Donald Trump has officially become president of the United States of America. So this brings me to the first reason that we're heading into a massive market crash is because of Trump's tariffs. The market is just a mirror. It's a reflection of how people feel the market sentiment about stocks, investing, finance, growth. Donald Trump has recently put in a lot of tariffs to a lot of neighboring countries. So if the government in America decide to make buying foreign goods a bit more expensive, then companies within America should be able to make more of that product or of that resource as such. A lot of companies just don't care about those things. So if it is more expensive to buy goods from a foreign country, the company doesn't really care, because all they're going to do is raise their prices to compete. So that company isn't actually going to feel anything. The people that are going to feel it are the consumers. It's you and me. I was on the phone to my grandmother and she was complaining about the price of eggs. What's happened is the price of eggs have gone up. Now, the company that are selling the eggs don't feel a thing. It's just the consumers have to pay that higher price because there are tariffs in place to stop people from buying goods from foreign countries. And this is why you saw reactions particularly like this.
There's one thing that you never ever do in business. It's change everything at once because you don't know what's working.
So when people start placing tariffs on one another, it just makes things a lot difficult for everyone, because another country start raising their tariffs and another country starts raising their tariffs, and eventually everyone just pays higher prices, and that's a lose-lose situation for everybody. And overall, sometimes what you can see in the economy is growth may start to slow down because people have to raise their standards, because all the prices are up. So companies have to just raise their standards overall. What I can tell you is the markets do not like this, because this causes uncertainty and difficulty in growth. Number two is Trump's stance on NATO. Donald Trump himself has always had a very complicated relationship with NATO. But his latest moves with NATO have sent shockwaves across the whole world. Whether it's his explosive comments on Ukraine or whether trying to leave NATO, this is putting the investors on the edge. You can take clips from a month ago, a year ago, 2 years ago of Trump repeatedly attacking the idea of NATO.
But President Trump has been sharply critical of NATO himself since taking office, accusing other member countries of failing to pay their fair share in defense spending.
I'm going to tell NATO, you got to start paying your bills. The United States is not going to take care of everything. And we're the schmucks that are paying for the whole thing.
This is triggering a real big question. Should America be involved with NATO, and what do they really gain from being in NATO? I understand it. It's a valid question. The thing that investors have to think about is, if America was to leave NATO, would that create a vacuum? And who would fill that vacuum in the global dominance sphere? Would it be Russia? Would it be China? Would it be North Korea? Our enemies? These type of things cause uncertainty because the markets do not like uncertainty. Every time you see uncertainty in the markets, you actually see sell-offs. People are selling their investments, and that makes sense. So this brings us on to number 3. This is the market losses. So a lot of people are talking about this in the finance space. The S&P 500, which is the top 500 companies in the United States, they're too concentrated. Go back a couple of years to when everyone was in secondary school, everybody, or high school, everybody hates top heavy fractions. Fractions like 1,000 over 3. Who likes that? I mean, that's just like... And this is kind of how the S&P 500 is. It's so top heavy. Most of the gains from the S&P 500 are from 7 of the top companies in the world. So 7 companies are responsible for 35% of the whole of the S&P 500, and they're nearly responsible for 50% of the gains in the whole of 2024. That is insane. This creates a problem because when those 7 companies underperform or start to perform badly because of uncertainty, this causes all the other companies to react in the same way. Perhaps one reason is because people are starting to notice productivity is slowly slowing down. Growth is actually coming on the lower end for the Q4s and for Q1 of the beginning of 2025. And this is just an idea, but we could be seeing growth return back to normal levels because right now we're in a huge uptrend. We have Tesla dropped 50% in one day. Of course, all the other companies are going to follow suit, of course. Number 4 is the Federal Reserve. So the Federal Reserve is a unique part of the government that kind of manages all the deficits and all the lending and borrowing with regards to interest rates to the United States. What we see is that Trump has never been a fan of the Federal Reserve. And why should he be? I mean, he's a businessman. At the end of the day, he is a damn businessman. Why should he be? All businessmen want to do the exact same thing, is to reduce debt and to create profit. Here's a fun fact about the United States. They are 36.2 trillion in debt. That is insane. So to think about it in a different way, imagine you had a company and it was 3 million in debt. I'm sure you would start sweating. I'm sure you'd be very worried. Now times that by 12 million. That is how much debt the United States is in right now. And because the Federal Reserve is independent to the president, Donald Trump can't just tell them lower interest rates, please, pretty please, lower interest rates. They're just not going to do that. So one thing that we always know about the Federal Reserve, and we've always known this for time, is that if the right economic conditions present, the Fed will lower interest rates. So if they're under a recession, then the Fed will look to drop interest rates a bit lower so people can borrow more, businesses can thrive more, so there's less debt occurring in the country. So what we find is like a high interest rate creates high fees for small businesses, and small businesses of the life of the United States. So you need to lower the interest rates as you find that people actually spend less, and this is something that would affect the economy as well. This is something I really don't understand. If Donald Trump actually does this and is successful, he is going to be one of the first presidents to be able to bring down a 36.2 trillion deficit. If he can bring that down, then he can get a refinance and get a better deal with lower interest rates and lower fees for the United States. Let me know in the comments if I'm right about this, but he wants to actually make other countries subsidize America and America to be a debt-free nation. Now, how he achieves this in only 4 years, I really don't know how. This is why you see his administration do as many executive acts as possible, a record number of executive orders to make sure that they can carry the momentum and hit that target. People are waking up. People are waking up to the fact that the financial system isn't as stable as you thought it was. Some people are calling this Trump's market crash, while many others think that he's being unfairly blamed. But the bigger question is, how is this going to affect you? Before we continue, again, don't forget to hit the like button and subscribe so we can be ahead of all the major financial shifts that are going on right now. So let's dive into the 5 critical ways you need to take advantage of Donald Trump's market crash in 2025. So the first point is prepare for a long-term impact. Before you start investing, you need to get a couple things in check before you touch anything or think about spending any forms of free money. You need to think about your job, savings, and the future. So you need to make sure you've saved up 3 to 6 months of living expenses that you can put in a savings account for a rainy day. And yes, they do happen. Next, make sure to pay off any debt that is higher than 7% to 8%, because that's going to stop you from building wealth if you have debt eating into your profits. So the next thing I want to talk about is you need to think slowly but execute fast. When it comes to investing, panicking will always cause you to make big mistakes. Right now, the fear index is at an all-time high. Investors are selling off as we speak. You need to remain calm and not buy into the mainstream narrative that the world is going to be destroyed or the stock markets are going to make losses and any type of investment that you make is going to turn into a loss. Because every time we've had a crash, we've had a huge recovery. The best thing to do is buy in those recovery periods. So one of the strategies I would actually recommend to implement is dollar cost averaging on a weekly basis. So this just means every week without fail, you buy that stock. You set a pending order and every week without fail, you buy that stock. And let me explain why that is a really good strategy. So there's 3 stages to a market cycle. The first type of cycle is a market correction or like a pullback. And this is usually like 10 to 20%. This happens every day, every week, every month, every year. For price to go up, it has to go down. For price to go down, it has to go up. It just goes up, down, and it doesn't even matter. And this is kind of what you need for healthy price action in the market. So the second cycle tends to be a bear market. Now that's a bit higher, and that tends to be 20 to 40% drop and tends to happen every few years. The next one you have is a collapse. Now this is very, very rare, but this is where the market completely crashes. This drop tends to be a 40% or greater drop. These are rare, but they are possible. Now, if you can dollar cost average every week in a bear market or a full-on crash, which is the third one, then you can make massive historic gains. If you actually think about it, every time it's crashing, you're getting a complete discount. You telling yourself this is actually really important because this is the type of resilient mindset you need to have as an investor. You need to tell yourself that this is on a discount. I need to lock in. I need to buy. People are fearful, and this is when I need to be greedy. Another strategy people have is to hold the market forever. So you can't lose if you always hold in the market. So if you have a house and you hold it and hold it. If you never sell that house for a loss, how can you lose? The same way with cryptocurrency. If you hold your cryptocurrency for a very, very long time and you never sell it for a loss, then how can you lose? Same thing with your S&P 500, same thing with all your assets. It's if you don't lose and you hold and hold, if you're able to withhold the storm of the bear market or even the crashes or the corrections, the pullbacks, then you will be fine if you're able to do that. If you have funds somewhere else, if you're working a full-time job, then this is perfect for you. You've got your main income and you've got your investments. If your investments go down, you've got your main income to rely on, and then when your investments go back up, you never sold, you didn't lose. That is a really good way how to keep your head up. And one side note I will say is make sure to have a target. This is something I've learned for the last 5 years. This is why 99% of investors lose money in the market. It's because people aren't making their targets. If price hits your target, sell your investment. Just sell it because it's hit the target you've wanted it to do. Don't hold on forever and be greedy unless you're planning to hold long term for the next 20 years. Lastly, I want to talk about diversification. So if you're still watching this, then you're probably going to be an amazing investor. What does it mean to diversify your assets? It just means that don't put all your money into one asset because that's quite risky. Because if that asset crashes, then all your money's gone. It's better to spread it amongst different asset classes so you can get greater returns and you kind of like maximize it. So me personally, I would like to invest into other businesses, stocks, cryptocurrency, and real estate. The market is changing really fast and you need to be ready for it. Let me know what you think in the comment below. Is Trump to blame? Is he not to blame? Is he going to make it? And are we going to have a massive pullback or crash? Or are we going to see a great rally up to the upside and see some really good gains for the end of 2025? Let me know in the comments down below and let's get this discussion going, and peace and blessings.